Good morning and welcome to the Morning Spotlight Podcast. I'm your host, Mike Ham, coming to you as always from the Spotlight Studios in Morristown, New Jersey. Today, our guest is the co-managing partner of Skoloff Wolfe, a nationally recognized leader in the legal sector of real estate tax litigation and matrimonial law. He leads the commercial real estate tax division and has secured several $1 billion, that's billion with a B, of assessment reductions for businesses, institutional clients, and high net worth individuals. He's handled property tax appeals for nearly every type of property, including hotel, multifamily, retail, office, industrial, assisted living, and skilled nursing facilities. And his insights have been featured in the Wall Street Journal, the Washington Post, Forbes, NJBIZ, and now the Morning Spotlight. David Wolfe. David, welcome.
Thank you, Michael. And that introduction will definitely make my mother proud. So I appreciate it. I'm excited to be here and look forward to a good discussion with you this morning. And congratulations on all your work on the Morning Spotlight.
Thank you. I appreciate it. I'm excited to have you on. I mean, our first introductory phone call definitely got me all jacked up for the type of conversation we're going to have as we go through the next 45-ish minutes. So
absolutely.
Yeah.
I tell my kids property taxes don't have to be boring.
Right. Exactly. So tell us, property tax is the broad, area that you work in. So give us an idea. I know I touched on some stuff, but the types of clients that you work on or work with, the type of projects that you work on, just so we kind of get some credibility laid out as we move forward.
Sure. Happy to do it. I typically don't speak about individual clients, but I work for a lot of the largest financial institutions in the country, publicly traded companies, large private institutions, large REITs, local developers, local management companies. On the public filings, you could see us associated with many of those type of companies. In the last couple of years, we have achieved several $1 billion worth of assessment reductions on behalf of those clients in terms of property tax appeals. So there's our property tax appeal practice. We also help a lot of those same companies in terms of property tax due diligence in transactions. And we probably work on several $1 billion worth of transactions annually for those clients.
Right.
Basically most capital market deals, we serve as a resource for many of the commercial brokers, whether it's, and I'm hoping not to leave anyone out, JLL, CBRE, Cushman & Wakefield, Marcus & Millichap, Kids, all of those types of groups. We're happy to serve as a resource to them and their clients.
Right. Awesome. All right. So good. Everybody knows, David knows what he's talking about, so we can progress here. So the majority of the people that listen to this show are involved in real estate in some capacity for the most part, or interested in real estate or whatever. And obviously property taxes are a big part of owning property. So why should real estate investors and owners care about property taxes? It might seem like a ridiculous question, but I'm sure you can give us some good reasons why.
Look, I think the reason I probably spend, the vast majority of my time on the phone now is that property taxes are the largest expense for property owners, the most variable expense potentially for property owners, and the most difficult to predict. So that property owners can have a pretty good idea of what their income is going to be. They can have a pretty good idea of projecting increase in rents, what they think vacancy or occupancy is going to be, when tenants are going to turn over. But getting the property taxes right or wrong can be the difference between successfully executing an investment or being destroyed on an investment. And so, especially when you have challenges in the market, but frankly, as the ownership of real estate is becoming more sophisticated, there's become a laser focus on the property tax line item, because you can't only focus on the top half of the ledger, right? The bottom half of the income statement matters. And that's where I spend all my time, is on the bottom half of the income, on the expense statement.
Gotcha. So those thin margins that we were talking about before we got on, I mean, property taxes can just blow that up, right?
Sure. If you buy a deal and you're projecting the property taxes are going to be $100,000 a year, and the deal makes sense, and then you buy a property and your property taxes go to $300,000 a year, that deal doesn't make sense anymore.
Right.
But you can be underwater and you may not be able to even pay your mortgage.
Yeah.
Right. And so Then the question is, do you have a meritorious, was it constitutional? Was it not constitutional? Right? Are you buying into a constitutional litigation? The fact that I tell somebody that may not be constitutional, that's not great solace if they can't make their mortgage payments.
Right.
Right. So, yes, especially on properties with significant debt and where properties being bought on thin margins, and we know the cap rates are at all-time low. So there's not a lot of margin in these deals. Right. So,
right.
Yeah, property taxes are a huge risk, and municipalities are looking for revenue.
Yeah, absolutely. Everybody's hurting right now for sure. So let's look at let's take an investor, right?
Sure.
So how would an investor analyze the property taxes when they're doing their due diligence on if whether or not a deal is going to pencil out?
They would call me, man.
Duh, right? So, all right,
Come on.
show's over.
What
Show's
kind
over.
of question is that? Let's just sign off and have a cup of coffee.
Yeah, right.
Look, so there are several things that I like to talk to property owners and developers about when they're looking at buying a deal, and that's and my practice is local, regional, and national. So I just achieved a $200 million reduction on an assessment in Florida, right? So we'll do large assets everywhere and a pretty good understanding of some of the national markets. And the process that I would recommend is fairly similar throughout. It used to be that people would tell you could project X%, if you buy a deal, project that your taxes, the assessment is going to go up to 80% of the purchase price or 90% of the purchase price, right? That or the assessment's not going to change, right? It used to be that people buying in New Jersey, and let's keep this to New Jersey,
yep,
would say it is unconstitutional to change an assessment because the property sold, right? That's the law of the state of New Jersey. That's a case that our firm won, Skoloff Wolfe property tax appeal. You can see it over my shoulder, right? Right. That's the law of the state of New Jersey. It's unconstitutional changing, but that doesn't mean that every assessor in the state of New Jersey is going to follow the law.
right,
Right. So what you need to do and what you need to know is there a history of assessments changing post sale. So what we tell clients is you need to, right? We have over 500 individual markets in the state of New Jersey. You need to be intimately familiar with every town, every municipality. And we look at least, several years worth of transactions. Right. And so is that a town where there's an increased likelihood of an assessment changing post sale? Right. That too, right. You now have in New Jersey, right. You have to be aware of more municipalities doing annual reassessments, right. Or when is an upcoming revaluation? I've had a client buy a property not knowing that there was going to be a revaluation the next year.
yep,
Right. So if you pay $16 million for a property that was assessed for 8, and the property taxes were based, and your whole projection was based on paying taxes at that number, and it gets reassessed then to $14 million, right? Not necessarily even your purchase price.
yeah,
But the taxes go all the way up because you didn't know that there was going to be a revaluation. You're dead.
right.
You're dead. So
Yep.
Is there an upcoming revaluation, or is this now a town that's doing annual reassessments, right? You need to know that.
Yeah.
Right. So that's another question they need to look at. They need to look at, is this a municipality like they're doing in Pennsylvania or Ohio, where they are now proactively suing property owners? Even in the face of COVID, there are municipalities who are suing property owners to increase their taxes. This is not me saying, hey, Mike, let's appeal your property because I think I can get you a reduction.
Right.
Right. This is, is this a municipality like in Elizabeth, like in Jersey City, where you're minding your own business and they sue to increase your taxes? So you need to identify all those types of risk factors, right? And figure out, where do you think the taxes are going to go?
Yeah.
There's no rule of thumb. People call me and say, what do I think the taxes should be per square foot on an apartment building in New Jersey? Or what do I think, taxes should be as a percentage of income? There's no answer to that question.
Right.
There just isn't. We have tax rates at $4. We have tax rates at $1. We have municipalities that assess close to market value. We have municipalities that don't, right? I mean, think about it. We have over 500 individual markets in New Jersey. It's crazy.
Crazy.
Yeah. Who does that?
Right. I don't know. New Jersey is always unique, But I have one question, because you were talking about, towns suing property owners to reassess their property value, right?
Correct.
So is that something that's been happening just during COVID, or was that something that started pre-COVID and now has taken on a new life during COVID? Because obviously COVID is a big topic this year. I don't know if you heard, but it's going on. It's happening.
I have heard.
Yeah.
Cautiously optimistic. Great news this week about the vaccines.
Yep.
I think that will, hopefully help with stabilized values and, talking to clients about that.
Right.
No, the increased phenomena is something that had been existing in these cases that had started in Pennsylvania. And about 4 or 5 years ago, it started in Elizabeth, New Jersey.
Okay.
With one firm really being on the forefront of representing the municipality and offering services really on a contingency basis, right? So they go out and it's great for the municipality. They sue on behalf of the municipality and they seek to increase the taxes at no cost to the municipalities. Before COVID, I was using the analogy that it was a virus that was spreading throughout New Jersey because more and more municipalities were seeing the benefit of potential increased revenue. So what started in Elizabeth started to spread to other surrounding municipalities. Then it went down to South Jersey to towns like Cherry Hill and Lindenwold. And it's now for the first time this year, it's up in Jersey City. It's in West Orange. It's in Roselle. There are about 30 municipalities, at least, that we are actively defending cases like that. Whereas 5 years ago, there were none of these cases, or if they ever happened, it was in very, very rare situations.
Right.
And to be clear, these are cases. They're not filing these cases against single-family homeowners.
Yeah.
Right. It's not like they're appealing your house.
Right. That would be a little bit
right
effed up, for lack of a better way to say it.
Because you'd be going down to City Hall and you'd be telling the mayor, what is going on here? Why are you suing me? Right. Yeah. That's not okay. That's not cool. But they're suing the largest property tax owners and places where they think they can increase their taxes. And we are in court and we're actively fighting those cases on behalf of our clients. We don't think these cases are constitutional. But again, right, there's knowledge of, you need to know that these cases are out there. You need to know that these cases are a potential. If you're buying into a town where this is happening, you need to know it.
Oh yeah. Right.
Right. I mean, right. So Jersey City, right. I went from telling people very little risk, right? Your assessment's going to probably be okay after you buy it. Right. They did a reval in 2018.
Yeah.
Right. 2 years after their reval, they're now suing everyone to increase their taxes. It's nuts.
Yeah.
No
Crazy.
bueno.
Yeah, no bueno for sure. So let's talk about, not to beat the COVID dead horse more, but I'm just interested to see how that's impacted real estate property values, because especially on the commercial end, I would imagine depending on what type of property it is, if it's like a retail property, if it's an office property, that might affect values, right?
Yeah. So the significant issue that property owners that we represent are having is that they have had a horrible, depending on the type of property, short-term crash in revenue. Right. So we do a lot of hotels, a lot of retail. Right. If you own a hotel and you had to close, your income went to zero.
Right.
Right. Maybe you got a PPP loan, so you're able to keep paying people. But you had to make a decision at some point, even if you were open. If you're only 20% occupied, can you afford to stay open? Right? Municipalities weren't saying you don't have to pay your property taxes.
Right.
Right? That's to call me. Right? Yeah. But the banks aren't saying you don't have to pay your mortgage. Same thing. A lot of this, what we're seeing, is in workforce housing. Right? So my REIT type clients, my Class A type properties, collections are you might see some softness there, but if you think about the types of residents who have been most impacted are the hourly, the restaurant workers, the people who literally can't afford to pay their rent right now.
Yeah.
They also can't be evicted. And it's a tragedy for them, but a lot of those apartment owners are also small business people.
Yeah.
And they can't afford not to get that rent because they're going to lose their property, or they're going to get a sale foreclosure from the municipalities who are not forgiving any of the property taxes. And it's a terrible situation, right? And whether or not it's a long-term impact on value or not, you're going to start to see people losing their properties if there's not any sort of relief coming from Congress.
Yeah.
It's a real now issue.
Right. And, I think we got, what was it, like the one stimulus that was sent out, and then you had the PPE stuff and stuff. And it just, I don't know.
But
It's frustrating for sure.
It's super frustrating. And look, I think you're going to see kind of, and when I talk to some clients, kind of an advancing of some of the trends that were already happening. So like some of the retail spaces, they may never come back.
Right.
Right. The Amazonian effect of retail has probably, been sped up. Right?
Oh yeah, definitely.
Right. So are those retail spaces ever going to lease again? Are they ever going to rent at those types of rents again? Right. Because a lot of those businesses have closed.
Yeah.
Right. Those coffee shops, I told you we own some coffee shops, right? 6 of our coffee shops are closed.
Yeah.
Right. It's a tough situation. And then hotels, there are hotel consultants that are saying, even with the vaccine, you're looking at 2024, 2026 until you get stabilized travel again.
Yeah. Because what are most hotels underwritten on? Like 80% occupancy or something like that to get the.
I mean, it varies by market, but yeah, if you're 80% occupancy is not a crazy level, right? I mean, you really need to be, your limited service, your full service, where you're located. But yeah, if you're less than 80% occupied, now some of it's, is it high season? Is it, all that kind of stuff.
Yeah, right.
But you can't just be operating at 40% occupancy.
No, it can't do that.
You're dead.
Yeah. Which is also something that I'm interested to see, like, because obviously here in New Jersey, like it seems like I know like today is November 17th. This episode's coming out on December 1st. And we're starting to see some, hopefully by the time we get to December 1st, we don't get too many more restrictions. But you're starting to see like them shut down. You can't sit at a bar anymore. The indoor dining closes at 10 p.m. and it's still at only 25% occupancy. And it's starting to get cold because we live in New Jersey. So how much longer can outdoor dining rather continue? It's just gonna be interesting to see like what kind of happens after that. Like, I mean, you're going into a winter where people, restaurant owners have been operating at 25% inside and whatever they can do outside, if they even have that option. And, it's just going to be an interesting thing to see what happens with that.
It's real. And it's devastating. It's devastating to the operator of that restaurant who has, put their life's work and savings into those locations.
Yep.
And it's a huge challenge and problem to a lot of those property owners, whether they're, and like I said, a lot of whom I represent are not these giant corporations who people think, they can just take a haircut.
Yeah.
Right? A lot of them can't.
Right. Yeah.
Right. And so there's got to be some sort of solution that addresses it globally.
Yeah.
Right. And look, there are municipalities that have developed some interesting programs. The city of Newark developed an interesting program to help retail property owners where in exchange for reducing rent and certifying that you weren't going to evict a retail tenant, you could get a reduction in your assessment. I think there were some issues with that program specifically, which we don't need to go into, but the concept of municipalities saying, hey, let's work together to figure out how we can collectively, work as businesses, landowners, property owners, and the community. Right. We need that.
Yeah, because if you don't, the long-term effects are probably more catastrophic than what they're, hurting on right now, right?
100%.
If everybody leaves because they get evicted or they, lose their property or whatever, that just makes a city like Newark or, here in Morristown or wherever, Jersey City, just like, everybody leaves. So that's not good either.
Right. And look at the tremendous momentum. Like, look at a city like Morristown, look at the amazing development. We represent a lot of the properties of Morristown and it's exciting and it's amazing. But do we really want to see all those retail tenants go out of business?
No. That's why I like walking around town. I could still, go grab a drink, get dinner, whatever. It's fantastic around here.
Right. Go to Roots. Right. Yeah. It's awesome.
Yeah. So let's talk about just keeping on the COVID, theme now with banks tightening lending parameters. Is it something you're seeing?
Yeah, look, it's something that we are seeing. I think particularly in the construction financing. I think one of the things that people really aren't focused on more globally is leasing velocity, right? So if you build a new building, right, and you have to now lease up a new building, if instead of thinking you're going to be leasing 20 units a month to get to a stabilized building, you only lease 6. the time it's going to take you to lease your, 200 unit building is now so much beyond what your construction, to get your construction financing or your lender is going to be willing to tolerate, that they're increasing the amount of equity they're going to require you to put in a deal. Right. And so that is causing issues both from a lending perspective. And look, I think people in general, they're scrutinizing deals more carefully. And frankly, one of the issues that I am now being more and more involved in is, what are the property taxes going to be? Because you're buying on such thin margins. Is there an opportunity to get a reduction in taxes? I'm working on a deal now, probably over $100 million deal, where one of the theses of the investment is that the taxes are going to go down, right? Is the bank willing to loan on the projected reduction in taxes? Because the deal needs to have a tax basis of X.
Right.
It's currently Y.
Yeah.
Right. And can we get a financial institution comfortable enough? Right. And that's one of the things that we have to work on with and for our clients and are spending more and more time doing. Or the converse, which we spend more time working on, is the client's paying 100% over the assessment. Why should the bank not think that the taxes are going to go up 100%?
Right.
Which is we spend even more of our time on here in the state of New Jersey, because there is frequently a disconnect between market value and assessed value. And that's something that we frequently have to talk to our clients about.
Right.
And the market just values property differently than the way we have to value properties in the tax court.
Yeah.
But, you're definitely going to see value and interesting, everyone's speculating on what does COVID do to office buildings, right? Are you going to see a big increase in value in suburban office buildings? I don't know. Right. Or no one's going to use offices ever again.
Yeah.
Right. So offices are have no value.
Right.
One of those two people is going to be correct.
Yeah.
And there are people on both sides of those trades. And so there are going to be people willing to buy, some people are going to be able to get vacant buildings at very low prices and take the risk on the fact that they think they're going to be able to lease up suburban office. Yeah. And for my clients who are making those types of investment, I hope they're right.
Yeah, that would be great.
They're smart. They're great. I think that should be great for the state of New Jersey.
Yeah, definitely keep people here. That would be something that would be nice instead of everybody going into Manhattan or Philly down in South Jersey, whatever. So
yeah, come home to New Jersey.
Yeah, you live here, work here.
We live here. There's no reason to go to Manhattan. Sorry,
exactly.
My Manhattan clients. I also think that Manhattan is great, and you guys will always do wonderfully.
Same. Right. Yeah. It's New York City. I mean, it's not going anywhere. All right. So I want to talk because I'm interested. Our first phone call, we talked a lot about hotels, and obviously we've touched on hotels a little bit, and how, their projected losses until possibly 2026, they're basically at like 20% occupancy. I think you said for the most part, generally. So like, are there any success stories of hotels going on right now, or are they all hurting?
Look, hotels range dramatically, right? So, the property that I represent at Disney World, it's been a tough time to operate at Disney, right? And you got to be creative. Properties at airports, right? When no one's been traveling, that's a problem. There's been some hotels that have done better than others, but there's no doubt. Like if you're a Jersey City hotel, you have not been able to make enough revenue to stay open, or if you've stayed open, you're just losing money, and it's a huge challenge. I have not heard of many success stories. There is Marriott, right? I think produced better than expected results. I don't know if that means that they just didn't lose as much money as everyone had anticipated.
Yeah, right.
Right.
Yeah.
Like, I think that, and there is also a perception, I think, that these companies are owned, like that Marriott and all these companies, they own all their properties.
Yeah.
They don't. Most hotels are owned by somebody who owns like one or two hotels. And then they use one of these companies to manage their properties, right? So they get a flag, right? They'll get Westin or a Hilton or a Hyatt, right? And so those companies will manage their properties, but so this is all of their life's work and all of their money into this property.
Right.
And so, those people are hurting, and especially people that have bought hotels in the last couple of years on the thesis that, values, average daily rates were going up, right? Everyone was traveling, the market was doing great.
Yeah.
There's going to be, if hopefully by June, people are going to be traveling again. And I did see something that, bookings went up like 20% yesterday.
That's nice.
Which could be great.
Yeah.
Right. But then I also saw another story that says, like, look, safaris in Africa, there's no way, like, if anyone who wants to go, there are no flights within Africa yet.
Right.
And there's going to be a really long time before the airlines can figure out, the local airlines in some of these more, far away locations,
yeah,
can figure out, they got to get enough people there to turn back on.
Yeah.
So hotels, I think, are going to be the trickiest segment of all of this. And then malls. What's going to happen with indoor enclosed malls?
Yeah. Especially with, on the retail end and the, yeah, sorry to cut you off. Keep going.
No, you're right.
Yeah.
Go. Nobody knows, right?
Yeah, nobody. Because you have all these big box stores, Sears and Lord & Taylor, I think, will also file for bankruptcy, and like the guy used to go to a mall in Rockaway, because
Sure.
I used to live up in Sparta. So we would go to the Rockaway Mall all the time. And it's just like, like every big store there, Sears, Lord & Taylor, like they're all going out of business.
They're all bankrupt.
So like, what do you do with that mall? Because then you just have like the little stores in the middle, and I know people are going to malls, not as much as maybe they were before, but you get into the holiday season now when that Rockaway Mall, I remember, was just packed all the time. That's going to be interesting to see what happens with that. And then you have American Dream, which is its own thing, but
Yeah, look, I worked on American Dream, when it first opened, or was supposed to open, a decade ago, right?
Right. Yeah.
So that wasn't great for those investors. But look, right, the question, like what I was talking before, like, did this advance what was already happening, right?
Yeah.
And if people aren't ready to go, people weren't going to those anchors before, which is why they all just went out of business, right? And like you said, is anyone going to go to the interior retail, really?
Right.
I think we saw, I forget who I saw just announce that they were closing, essentially 300 of their, interior mall locations.
Yeah.
Because the concept behind the super regional malls was that, people would go to the anchors.
Yeah.
And while they were there,
right,
they would go to the stores on the inside. Well, there are no more anchors.
Exactly.
So.
Yeah, I did see something, and I don't know if this is probably even irrelevant, but tangents are always fun on this show. That the American Dream Mall now, instead of doing whatever their initial breakdown between like retail and like experience type stuff, because they have like the ski slope and like a water park in there or something like that, that they're like shifting it to be like 70% experience and only 30% retail. So I think that's going to be interesting to see like who cracks that code to get people to go out and go to those places where they can actually like do stuff, because that's what people like to do now. Like the only reason why people leave their houses now is to go do something, and it's not really to shop anymore, because you could shop online, you go out and it's not just you go out and get dinner anymore. You can go throw axes, you can go to Topgolf, you can go to all these different places. So like, what are these, big box or these malls going to do to like replace and make sure that mall stays?
You don't need to go to J. Crew to get J. Crew clothing.
Yeah. Right? If I know my size, I know I'm a little bit hefty, so XL is my size. Thank you. I appreciate it.
The camera only adds 10 pounds.
Yeah. That's generous.
my daughter, who's 12, asked me, well, Dad, how many cameras are watching you right now?
How many cameras did I eat? Yeah.
So look, I think the experiential question is super interesting, and there has been this trend towards, right, like we need experiential, programming at our centers, which a lot of our clients have done, right? So what used to be just go and shop, right? They put in gyms, right? They put in movie theaters, right? But during the pandemic, those places closed, right? The one thing people didn't want to do for sure was the experiential.
Right.
Right. So those have been the places, right, that have been most impacted by COVID, right, were the experiential, right, places. And now I'm dealing with centers where they're trying to fill those vacancies.
Yeah.
And then what's the calculation there? Do you try and get more experiential retail?
Yeah.
That seemed to be like the right thing to do before this.
Right.
Maybe it's still the right thing to do.
Yeah.
That's why they're in the business and I just help with the property taxes because I don't know the answer.
And that's why I just sit here and do this and sell title insurance, because I don't know the answers either.
All right, but you seem to be really good at it.
Well, I try, it's a lot of practice. So let's go back to some of the tax stuff because obviously that's like your wheelhouse and that's why you're here. So we had put together some notes prior to getting on here. And one of the things that I saw on here that I thought was really interesting is tax exemptions in New Jersey. Those things, according to these notes, are under attack. So can you talk about that a little bit more?
Yeah, so the New Jersey Constitution and statutes provide that nonprofits and state entities shouldn't pay property taxes, right? So churches, hospitals, schools, right? They're exempt from paying property taxes. And, I get it. Their municipalities are challenged. They're looking for revenue. But they are closely scrutinizing whether or simply attacking the validity of exemptions on all of those types of properties. I am currently, there was a case a couple of years ago in Morristown where you sit today, where Morristown Memorial Hospital was ruled not to constitute a not-for-profit for property tax purposes. No one agree. Everyone agrees they're a not-for-profit hospital.
Yeah.
Right. But for property tax purposes, the court concluded they didn't satisfy the statutory scheme created by the legislature. So they lost the exemption on the entire hospital.
That's a big hospital.
And so then towns around the state started suing hospitals, all the hospitals, a lot of the hospitals, to get rid of their exemptions. Right. So I'm defending a hospital, right? Community hospital, providing healthcare services in COVID to the citizens of that municipality and surrounding municipalities, risking their lives.
Yeah.
At the same time that the municipality is trying to remove their property tax exemption.
Yeah.
Right. And this is happening not only to hospitals, but I've represented religious institutions, churches, synagogues. I just represented Keene University, a state university, at the Supreme Court, where the court agreed and took away a portion of the exemption on the campus because it was a restaurant that was open to the public. And no one had before had thought that any portion of a state university could be subject to taxation. So nonprofit owners of real estate need to be really careful with how they're set up, how they structure themselves internally, right? Whether or not, right, they're explicitly complying with every detail, right? And it's just not enough to be, I'm a non-for-profit company and I own this real estate.
Yeah.
Because, the towns of New Jersey are coming for them. And that is, Princeton University got sued by citizens. So in New Jersey, it not only can a municipality try to take away your exemption, but you can be any taxpayer in a county can sue an institution to try to revoke their exemption. So in Princeton, I think it was 3 residents sued Princeton University to get rid of Princeton's entire property tax exemption. And ultimately Princeton settled and is now making some sort of property tax payments.
Right.
So it is something that is happening in other states. But when I meet with my colleagues from around the country, and I'm on the board of a super edgy group called the National Association of Property Tax Attorneys.
Oh boy.
Yes, you should come to our parties. But it is many of the thought leaders on this topic, and many of the states look to New Jersey to see what is happening here in terms of exemptions really being under attack. And I joke, I joke around that nothing is sacred, right? Because they're literally attacking churches and synagogues.
Yeah.
But it's not a joke. I
Right.
mean, it's a serious matter. And I get that municipalities want to assess everyone that should pay taxes.
Yeah.
But our Constitution and our legislature has said that these entities should not pay taxes, and they provide a significant benefit to the society. And there are hospitals in New Jersey that if they had to pay property taxes, they can't do it.
Oh yeah, I believe that.
Right? It's not like, so you may have to make a choice. Do you want to pay property taxes, or do you want to have a hospital in your community?
Right. Yeah. It just seems like some of the stuff that you're talking about with like these tax exemptions, and then certain municipalities suing certain property owners to raise their property value or property taxes. It just seems like something that's super cannibalistic almost, and that like the long-term effects are going to be even greater than just like the short-term benefit of the town getting more money right now. I mean, like if you have hospitals going out of business, especially now, like you need them. I mean, like we're watching hospitalizations go up right now. You can't take away hospitals by making them pay more in property taxes, because it just doesn't really compute in my brain. And I don't do this every day like you, but it just doesn't make any sense to me.
No, look, we got people standing on their balconies and applauding that these are our heroes, and they're putting their lives at stake. And it is extremely short-sighted. And so are these increase cases.
Yeah.
Right. So as soon as anyone starts filing an increase case in a market, when a property goes on the market and someone is looking at those properties, they know, right? They're either going to call me, they're going to call someone else who does what I do, and I'm going to tell them there's a risk now in this market that your taxes are going to go up, that you're going to get sued, right? And so when they look at the margins, they're going to project a reduction in NOI. So the very existence of these cases, right, just by the city council decided we're going to file these cases, they may get a little bit of increased revenue. Right. They have just reduced market value across the entire city.
Yeah.
That's not good for the residents.
No.
It's not good for anybody.
No.
And it's short-term. It's a short-term infusion of revenue, potentially.
Yeah.
And that may be good for that year. But like you said, it's short-sighted. And it is certainly not, when we're talking about a spirit of collaboration and working together and trying to get through these times, it is definitely not the right time to be doing this.
No, definitely not. So I want to talk a little bit about going back to some of the stuff that we were talking about at the very beginning. So if you're working on a deal and property taxes are something that you obviously have to think about, we explained why and the importance of that, and the potential pitfalls that there are. But are there ways that you can how can real estate property taxes like improve a deal? Well, is that a way that can that happen?
Yes. So I actually make my living primarily by reducing property taxes. Right. So there are many properties, not all, and there are states where you can just use every owner appeals every property every year. Right? There are states where there is no risk to appealing property taxes. Right? In New Jersey, you appeal at your peril. In New Jersey, God bless New Jersey, right? If you appeal and you are too low, your taxes can go up.
Okay.
Right? And not everyone understands that. So that's my first caveat. But yes, you can identify properties that are overassessed. And we identify a lot of those properties every year, both that our clients own and that clients are looking at in potential deals. So you can identify a property, and let's say you're paying. I had a client who paid, let's say below. Let's put it like this: I reduced an assessment by well over $100 million following a transaction this past year. That exceedingly allowed that property owner to execute their investment thesis. Right. It was something that we were able to identify, right, and look at in advance.
Yeah.
Right. The converse is, right, finding out, is there an upcoming reval? Right. where do we think the taxes are going to go? Are you walking into a bad situation? And if the other side is saying, oh, no, don't worry about it, right? You're fine. Don't worry. Everything's gonna be okay. Okay. Well, then escrow some money, right? Let's put some money aside, and we want, right? If you're right, then you take the money. But if you're wrong, right, and the taxes go up, then we get the money, right? So that way you're protecting yourself in a transaction.
Yeah.
Right.
So you should seek to use an escrow fund if the property taxes are, you're just not sure. That's like a good thing to do.
It's an interesting thing to do that I think more people are doing. It's certainly something, there needs to be a real reason to do it. You need to identify real significant risk.
Right.
And frequently those are deals that I get brought into, and you end up with more than one attorney involved in identifying the risk. You just can't go into every deal and say, I want $1 million put aside because I'm concerned. But when there is real risk, it is a way to maybe move a deal forward that was getting held up, that was getting stuck. So that is definitely something that I've been seeing more.
Gotcha.
And I have also been seeing more people doing entity transactions where they're acquiring the entity as opposed to the real estate. And they do that for a whole host of reasons. But I think there's also a perception that may insulate them from a property tax increase.
Right. Gotcha. Okay. All right. So I'm pretty sure we've touched on most of the stuff that I think we wanted to touch on as we were going. Was there anything that we missed? I don't think so.
No, I think you did a tremendous job of covering a wide breadth of topics in a very short period of time.
Right. I'm just an expert on all this stuff. So, all right. So we're going to move the show into our closing segment, Under the Spotlight. So that's what we call it. Morning Spotlight. This is Under the Spotlight. So we're going to put you under the spotlight. And you're going to give us the final point. So we just listened to David Wolfe talk for almost 45 minutes about property taxes and all different kinds of stuff. What is one thing you want them to, at the end of this episode, to leave with? What's that one thing?
I would say get ready now, right? 2021 is the first year that is going to incorporate the impacts of COVID on property tax values. In most jurisdictions, the 2020 values and assessments could not take COVID into effect.
Right.
So for 2021, right, this issue is going to be first and foremost on most property owners, and should be first and foremost on property owners' mind, because their income has been decimated. Right. So we know that after January 1, most assessments are going to come out, both in New Jersey and in other states. And they need to be prepared. They should have their team ready. They potentially should have their appraisals ready. And they should be ready to go. We have properties that we're going in now to say, we want a reduction going into 2021. We don't even want to wait, right? We're getting hired now to going in and saying, we need a reduction now. We can't wait. So now is the time to, what is your game plan, right? Like they said with votes, make a plan.
Yep.
Figure out your vote, make a plan. That's my final point to you. Make sure that you've got the right team in place and you know what you're doing on every property you own.
Right.
Because every property needs to be evaluated, analyzed, and decided whether or not to appeal. But do not make the mistake in the state of New Jersey of just filing an appeal on every property.
Yep.
That would be an error. And if, right, as I said, you appeal at your peril in the state of New Jersey. So you need somebody to screen every case to figure out whether or not there's merit. But it's time to get ready now. The valuation date for next year is October 1, 2020. So you can do it now and get ready for next year.
Got it. All right. So, and then they should call you to get ready, right? Obviously.
Well,
or help if they need somebody.
If they need counsel who, has extensive experience in this subject matter and represents a lot of the largest and most sophisticated clients in the country.
Yeah.
And who's cool enough to have a logo above their shoulder that says property tax law.
Right.
Yeah.
That's so cool. I mean, like I thought my background was cool, and then I saw the property tax law thing and I was just like, that just That just craps on mine, I guess. But
no, yours is definitely a kind of a cooler, like, in the bunker kind of look.
yeah.
Mine's way too corporate, but we're working on it.
Okay. Yeah. No, I got it. It's all about the image that you want to project, right? Like I got the hat and the logos everywhere and the whole thing. So it's all the image. So so for everybody listening, that's going to wrap up our show. I'm going to put all of David's links and his contact information in the show notes. So make sure if you have questions for him or if you want to reach out to him for some help on some of the stuff that we were talking about, make sure you reach out to him. So if David, you could send me all that stuff, I'll make sure I put it in there. And then if you want to reach out to me, if you want to hear us talk about a specific topic on the Morning Spotlight or be a guest, email me at themorningspotlight@gmail.com or go to our website, themorningspotlight.com, and fill out the form, and I'll get back to you as soon as I can. David, thank you again. This was awesome.
Thanks, Mike. I enjoyed it and look forward to seeing some more episodes.
Absolutely. Yeah, me too. And everybody else, thanks for listening, and we'll catch you next time.